Howdy, guys. Jimmy Song here. Welcome to another episode of Bitcoin Tech Talk, where we talk about the various things that happened in the past week and we go through the newsletter. I'm going to try something a little different. I'm going to read some of three of the most important articles that I thought were worth sharing this week. Anyway, if you are not subscribed to my newsletter, it comes out every Monday. It is at 9 a.m. Central Time, and basically it's all of the sort of technical news that's out. Before I get to all of that, the Little Bitcoin book is out on audiobook, and you can get it for something around like $12, or if you have an Audible subscription, you can get it for $1 credit. There's also the Programming Bitcoin book that's available on Amazon for $40.99. And there is the Little Bitcoin book, which is available on Amazon for $11.39 paperback and $9 on Kindle. Anyway, those are some things I need to show. Let's go through some of the stories, and then I will go through and read some of the things that are going on, some of the ones. Bitcoin Core 0.19.0.1 has been released. It's a bunch of notes which I'll go through later. But it's got a whole bunch of interesting changes. You should upgrade if you have the chance. All right, Insecure Shortcuts and Musig, and this is from I think Rusty Russell. No, it's from Blockstream. But basically, the Schnorr signatures, there are certain things that you can do like Musig, which allows you to aggregate signatures and aggregate keys. So right now, when you do a multi-sig transaction on Bitcoin, you have to, if it's like a 3 or 4, you have the 4 pub keys and 3 signatures. That's a lot of space. With Musig, what you can do is compress those 4 pub keys into a single aggregate pub key and compress those 3 signatures into an aggregate signature. But there are certain things that you need to make sure you're doing correctly. Otherwise, you may be compromising security if one of the parties is trying to fool you or something like that. This is why that article was written. Very important stuff. Bitcoin is a way to opt out. A cashless future. Rhythm of Bitcoin, very good account. Been writing some articles lately. I think he's also got a newsletter, but really cool stuff about what Bitcoin is and so on. And in particular, cash is kind of disappearing, and that's something that we need to think about and talk about. Why that's a big deal and how Bitcoin solves this particular problem. All right, let's take a look at the next one, txstats.com. This is from BitMEX, but basically it's the successor to p2sh.info. Last I checked, this site wasn't loading for me, and it might be Ghostery or something else. But it does seem like a pretty useful thing if you can get it to load. Because you get all sorts of information about the particular transactions and so on. This is an interesting website, Bitcoin's never look back price. So basically, it's taking a look at when Bitcoin hit a certain price, and at that point, it never looks back at that price again. So you can take a look at like 2011, for example. The never like right around like April or May or somewhere around there, we never looked back at $1. Sometime in early 2013, we never looked back at $10. Sometime in 2013, I think, we never looked back at $100. And sometime in 2017, we never looked back at $1,000. Now, we haven't quite gotten to the $10,000 never look back price, where I think currently in the never look back price of like 7,200. I think it's a little bit lower than that. It's like 65 because we hit a low. But the fact that it maps so well linearly according to this regression was very interesting to me. And of course, that's For some reason, you have to take the square root of time or something like that, since it's assumption to get this nice linear graph. But what it looks like on a normal graph without log and everything else is that it ends up being these nice regression curves. Um, and that's the expected price today is like 6,142. The minimum price is 6,150. There's a particular trend channel basically that it seems to be in, and that's an interesting way to look at it. I suspect that this is another way to look at the stock flow in some interesting way, but very interesting way to look at Bitcoin price and so on. Option simplified commitment. So Rusty Russell wrote this to the Lightning Dev channel about basically the entire simplified commitment idea. And this, it's a discussion that they've been having for a long time. But commitments and payment channels are a little bit complicated, and simplifying it is a big deal. And there is indeed a pull request in the Lightning RFC, and you can see like what the actual change is, and it is an option. It's not something that you're required to do, so that clients don't have to upgrade and stuff. But it does make it vastly simpler. All right, Lightning Network and its effect on Bitcoin. The Lightning Network: Why I Quit the Bond Market for Bitcoin by Nick Baccia. So I'll do a read through of this a little bit later, but it's an interesting article about Lightning. All right, this caused quite a bit of controversy, and this is the Breaking Mimblewimble's Privacy Model by Ivan Bogati, I guess. Basically, he's saying that the privacy in Mimblewimble is fundamentally flawed. And, like he did some tests with, some of the Grin features and so on, and essentially made kind of like a super node that connected to everybody and was able to figure out who was paying who and so on, based on the UTXO model that Mimblewimble has. The Grin developers actually wrote a response saying, these were actually all known, and there are a few interesting things, but it's not quite as big a deal as it's made out to be. The role of Dandelion routing and breaking Mimblewimble's privacy model. I think also the Beam developers had some sort of response as well. But all this is to say that there are some things about Mimblewimble with respect to privacy that maybe it's been oversold a little bit that we need to talk about. So those are the stories this week. Let me quickly go through my Twitter, and then I will go through some of the different stories. I'll actually read them afterwards. All right, so decentralized is to altcoin as objective is to news, which is to say that altcoins claim decentralization, much like a lot of news claims to be objective, but it's not so at all. And really only Bitcoin is decentralized, and really all news is biased, kind of. I don't know, maybe if you had the raw data, it would be not unbiased. Financial stability is an illusion. There are no rules you can abide by that will keep you safe for life. Sadly, the state promises you these things in return for your sovereignty. Don't fall for it. So basically, a lot of people sort of bank on financial stability, right? Like if I make the right investments, I'll be okay for a long time and so on. But this is not this, and that's kind of the way in which the state gets you to comply with all sorts of things. But what I'm saying in this tweet is that, there are no guarantees like that. Governments can fall, currencies can devalue, and all these other things. So, like in a sense, don't fall for it, right? Like because it's very fragile to black swan events and so on. This is an article I wrote a while back. I wanted to give it a little attention. Investing in altcoins without looking at the code is the equivalent of diversifying into random pink sheet stocks without doing any research. And it's kind of true because most people don't look at the code for altcoins, and that's kind of the sad reality. Um, when there's no good store value, everything becomes a store value. Everything that's got a higher value than the utility value is a bubble, and Bitcoin will pop those bubbles. Essentially, what I'm saying is that things have a utility value, like a house has a utility value of being able to live in it, and you can charge rent, and that's like sort of the market value there. But there's a huge store of value premium right now because there are no good stores of value, and people are forced to go into illiquid things like real estate in order to store their value long term. And what Bitcoin's going to do is, if all of that store of value premium goes into Bitcoin, those things will go back to their utility value. And you can argue that stocks are the same way. They're like, if you look at PE ratios of stocks before like 1917, it was way lower. It was like in the 8 to 10 range for almost every, like 10 was considered like insanely high. We have PEs that are like 30 or higher, or even companies that aren't profitable at all. So that tells you that something is really off about the stock market as well. And fiat money is the reason. Bitcoin, once you go back to sound money, it pops all those bubbles. So I think we're in for some serious reckoning eventually when Bitcoin takes over. The products and services most in demand will not want to have to deal with the risks and unfairness of the banking system. They'll demand Bitcoin instead. Now, this is something that I've noticed, is that the regulatory burden around starting a business tends to be fairly high. If you want to open a bank account and get the right licenses and so on. At some point, people are going to be like, you know what, I don't want to deal with that. I'll just take Bitcoin. I don't care if I don't need a bank account. And their good or service will be so good or will be underpriced compared to the competition that has to comply with all those regulations that they'll be able to outcompete them. And and that's where really the medium method of payment use case for Bitcoin, I think, kind of comes into play. And that's what I was trying to talk about. Why bribing people to build on your platform is a terrible signal. Suggest no one would build on it without additional incentives, brings in scammy projects, removes most of the profit motive, tells market to get subsidies before building on the platform. This is, I think it was in a little bit in response to BCH, creating a $200 million ecosystem fund or something like that. But this has been the case for a lot of other crypto projects. And the thing is, this is exactly like a government subsidy. When you have a government subsidy, people don't want to do it without the subsidy, and that's kind of what you're teaching the market, and that's what a lot of scamminess goes on because people think it's free money and so on, and it takes out a lot of the profit motive because you're getting the subsidy anyway. So everything is bloated. Everything's not going via the market, but it's kind of a thumb on the scale from the government, and that's what these ecosystems are doing, and that's why I think it's a terrible signal, and I think those funds will ultimately fail, just like a lot of government subsidies do. Centralization results in not only abuse of power, but cover-ups of the abuse. Decentralization is real protection against the power that corrupts. And this is true of, I think we've been seeing this a lot in like the Jeffrey Epstein situation with the media. Like a lot of the media just they had all of the same exact data. They just didn't report on it because the centralized powers that be threatened them, and they couldn't go with it. And that's kind of what happens a lot of times is there's an abuse of power and cover up of that abuse that happens over and over again. And decentralization is the only way you can bring a lot of this stuff to light. Either that, or you depend on the virtue of the people that are doing a lot of this, that have that power. And of course, absolute power corrupts absolutely. And it's just not a good situation. Decentralization is the solution there. Some of the worst things in life are free. I was talking about airdrops and things like that. Anxiety, fear, uncertainty, doubt, urgency, FOMO are all ways that the powerful try to squeeze others. Being able to deal with that is a skill useful in all aspects of life. Now, we are in a little bit of a dip right now, and I imagine a lot of you are feeling a little bit of anxiety, some fear, some uncertainty, some doubt. Others of you that have been through this before are using this as an opportunity to stack sats and so on. Whatever the case is, that those kinds of emotions are exploited by the powerful to squeeze you out of your positions. And this is why I call it lessons from holding, because you really need to have gone through that and know what emotions you're going to produce are going to be in you in order to combat the urge to sell and so on. Little Bitcoin book is out on audio. There's so much money being pumped by the Fed that WeWork got billions. Most valuations at every level reflect the reality of monetary expansion. At some point, this will filter down to the consumer level where it'll show up in the CPI. Bitcoin, it's just a matter of time. Fact of the matter is, every time there is monetary expansion, there are all these cheap loans that are available. That means that more capital can flow towards quote unquote investments, or what I like to call them. They're really just stores of value, or what people are using in lieu of stores of value, and so on. So in a sense, WeWork got billions and billions because that money didn't have a good place to go, or they were sufficiently diversified in other things that they thought this might be a decent bet. Everything is overinflated, and I think the fact is the U.S. dollar is the reserve currency of the world, and the dollar is going to probably feel it last, but other countries, they're starting to feel it, and the purchasing power of their currency is going to go down. We're seeing that in Argentina right now. We'll see that in a lot more places in the coming future. And at some point, it'll also happen in the United States, and it will show up in the consumer price index. All right, I think this was the most popular tweet this week. Bitcoin is the fairest money to ever exist. And it's fair in the sense that anyone can go get it. You don't need anyone's permission, and no one can take it away from you. That's what I meant. I think people got it. Blocks Live, I do have this theory, this kind of fun theory about Satoshi being a robot from the future. Listen to that video if you want to know what that was. The institution of central banking is responsible for most of the wealth disparity in the world today, and no, it's not fixable. Bitcoin is the path to a fairer world. And the reason for that is because central banking or centralized money and easy money, fiat money, has the Cantillon effect. And Cantillon effect means that the people that get access to the money first get all of the benefits. And the people that get access to the money in any kind of fiat system are the people that are already rich, that are the least credit, that are the smallest credit risk. So those people get interest rates of 0, 1%, sometimes even negative percentages, right? Like this is what a lot of commercial banks and stuff get, and even some mortgages in the Scandinavian countries are negative mortgage. But those are the people that get the money, and and the poor people get interest rates 18+%, and that's what causes that exacerbates the wealth disparity problem. And central banking is a primary cause of it, and it's not really fixable. All right, play stupid games, lose stupid prizes. This is apparently a bunch of DAI liquidations, some of them over $1 million. That's kind of what happens. Until you sell, the altcoins you own are owning you. The Hopium Day offer isn't worth it. And this is true too. A lot of altcoins basically have a lot of fans, or they call them their community or whatever. But they're kind of owned by that altcoin, right? They're shilling it everywhere they go because they know if it doesn't go up that they'll have failed as an investment for that person or whatever. And it's not worth it, man. It's essentially selling your soul in the vain hope that it will replace Bitcoin or something like that. Sorry, guys, it's not going to happen. Nouriel isn't down because Bitcoin is successful. Nouriel is down because he's a completely unnecessary rent-seeking bureaucrat. Just wanted to put a nice dig against Nouriel because that's his shtick is bashing Bitcoin. Price always goes down when I procrastinate on coding. Sorry, guys, I'll be back finishing the wallet course tomorrow. Yeah, sorry. Sometimes when I procrastinate on something, that's kind of what happens. Price goes down. Yeah, it's not. I'm just kind of joking here, obviously. Receipt that's signed by the parties involved plus some sort of third-party auditor is a much cheaper and faster way to add data integrity than an entire blockchain mechanism ultimately meant for coordination. That's from an article that I wrote a while back. But it's crazy to me that people still can't figure out that public key cryptography and receipts are what they're really looking for, not this crazy thing called blockchain. Anyway, those are my tweets this week. I will go over them next week if it's still popular and stuff like that. All right, so let's take a look at Bitcoin Core 0.19.0. Here are the release notes. Here are the actual notable changes. So new user documentation, reduced memory suggests configuration tweaks. In-memory cache, mempool, number of peers. If your node goes down or runs out of memory, or if it's swapping to disk or something like that, this is a good way to make sure that your node doesn't do that, because you can get rid of some of the memory intensive procedures and so on. New RPCs, get balances, so you can get mining, untrusted, pending, and immature balances. That's kind of nice if you have, depending on what you're, receiving to the core wallet and so on. Set wallet flags, sets and unsets wallet flags that enable or disable features specific to that existing wallet, such as the new avoid reuse feature documented elsewhere in the release notes. So avoid reuse is basically don't reuse any kind of addresses and so on. And you can set that for the multiple wallets. And I think a while back they set it to so that you can load multiple wallets at the same time. So you need to be able to set that flag on each wallet and so on. Get block filter gets the BIP158 filter for the specified block. BIP158 is based on something called Neutrino, which is compact block filters. And compact block filters allow you to basically get a lot of data about blocks without downloading the entire blockchain. So you only essentially end up downloading the blocks that you're interested in, but you need the filter to know whether or not you're going to be interested in it. New settings, block filter index enables the creation of BIP158 block filters. So this is, again, it's pre-computed by the node, and you can, it'll create it. Any full node can generate these block filters, and they're deterministic, so they're the same. You can also ask the network for them and check that it's exactly the same as you would compute, and so on. If you're a full node, if you're a light node, then certain things you're not going to be able to compute. New updated settings. White bind and white list now accept a list of permissions to provide peers connecting using the indicated interfaces or IP addresses. Okay. Users setting custom DB cache value can increase their settings slightly without using any more real memory. Okay, great. Send many no longer has a min-conf argument. So these are all RPC commands that existed before, and they got slight updates. I imagine a lot of it is based on some of the wallet stuff that's new. GUI wallet now provides Bech32 addresses by default. Disabling BIP70 is now the default. So basically, BIP70 is a payment protocol that really only BitPay used, and it had some flaws in it, so they're basically getting rid of it. Deprecated mempool replacement is removed. Bump fee no longer accepts a total fee option. Bump fee has a new fee rate option, and generate is now removed after being deprecated. So, you can't really, generate to address is what you should be using anyway. BIP61 reject messages were deprecated, so no more reject messages. Well, I guess you can still do it by doing enable BIP61 in the command line option. Vectors, especially the default value for pure Bloom filters. So BIP37 Bloom filters are no longer being served. By default, you can always turn them on if you want to get to those. Low level changes. I don't think these are, They are important, but they're not going to show up in the UI or anything like that. So those are the changes in Bitcoin Core 0.19.0.1. Let's read through this article, The Lightning Network, Why I Quit the Bond Market for Bitcoin. I'm a markets junkie. A markets junkie is someone who is physically dependent on watching assets prices tick up and down, constantly trying to analyze the cause and effect of every movement across the globe. Naturally, when I first understood the true nature of the Bitcoin protocol, I became obsessed with its price as well. Rabbit holes. I began my dive down the Bitcoin rabbit hole in 2016. I was trading US Treasuries and other interest rate products for an institutional asset manager. My first big trading gig. I had unprecedented access to some of the most brilliant minds on Wall Street for the first time in my life. So it's safe to say I began my dive down the banking rabbit hole in 2016 as well. The craziest thing about going down the Bitcoin and banking rabbit holes at the same time is the difference in scale. It's unimaginable. At the time, Bitcoin had less than 20 billion in total value. I, a relatively small player in the bond market, was turning over 20 billion in treasuries in just a few months. One seemed way too small, the other way too large. I knew I had to learn to start thinking in trillions if I was to understand the scale of the global financial system. The numbers game. I'll never forget the moment I conquered the concept of trillions. My fellow trader and close friend played a daily numbers game with us on the trading desk. This time the question was how much money settled via the Federal Reserve's wire system last year. I thought for a minute, did some mental math, and guessed 3/4 of a quadrillion. The answer, sure enough, was $767 trillion. I was off by a gargantuan 17 trillion, but somehow that amount was both less than 3% of the margin of error and 1,000 times the size of Bitcoin. Bitcoin was simply too small at less than 20 billion, and the dollar system had enough zeros to make one's head spin. The two would reconcile over the coming decade or two, I had decided, and I should be spending my time on the Bitcoin side. I started thinking about life after the trading desk, knowing it would probably involve Bitcoin. Bitcoin is digital gold. I watched treasuries, equities, gold, oil, currencies, and tried to understand how they all work together. I saw Bitcoin assuming the role of gold as a sound money role in the digital future. The supply schedule and difficulty adjustment game theory hooked me in. I started digging and immediately found the conversation focusing on an update called SegWit, which would allow for something called the Lightning Network. First time I used Bitcoin, I tracked the transaction status on the Block Explorer. Right away, I became intimately aware of the settlement process of Bitcoin. It was thrilling. Of course, the first block took over half an hour, and my heart was quite unnecessarily panicking. Basically, the finality of settlement after a couple blocks felt incredibly secure, but the hour that it took was completely impractical for any sort of daily routine transaction. It was clear to me that Bitcoin was digital gold, and instead of taking weeks on ships across oceans to settle, it took about an hour. Incredibly powerful, empowering, and in fact revolutionary, but not a global currency. Lightning Network makes Bitcoin a global currency. Lightning Network changed Bitcoin forever with instant settlement. In the Lightning Network, settlement is free from the time burden of block confirmations. Lightning's architecture consists of instantly settling financial agreements secured by a call option or a justice transaction. Lightning Network massively expands the velocity of Bitcoin, increases Bitcoin's capacity for transactions by orders of magnitude, and most importantly, began a new wave of Bitcoin innovation. The very concept of streaming money has software developers buzzing with energy, and I'm blown away by some of the use cases they're coming up with. Bitcoin's supply schedule initially hooked me, but Lightning was the force that was pulling me in. I decided to dedicate my intellectual capacity to Bitcoin's Lightning Network because a store of value asset exhibiting medium of exchange currency speed and scale is unprecedented in human history and worth pursuit. So basically what he's saying here is that there's Bitcoin is clearly a store of value, but Lightning enables it to get to medium of exchange or method of payment, and that's the thing that he's talking about here. I took the jump, now I'm along for the ride. After years of trading bonds and leading a dual life of rates trader and Bitcoin fanatic, it was time to make the transition full-time to Bitcoin. The community graciously welcomed me and my idea of the Lightning Network reference rate in 2018, but it wasn't until earlier this year that I met the team from OpenNode in downtown Los Angeles, only a few blocks from where I traded treasuries. The chemistry was instant because the vision was precisely aligned, the full conviction in Lightning Network and its role in bringing Bitcoin to the world. My message to them was clear. I wanted to help onboard the world to the proverbial Lightning Network Protocol, Bitcoin Protocol stack, a la the ubiquitous TCP/IP stack upon which the world's internet infrastructure is built. To my delight, they wanted me along for the ride. Lightning is just the beginning. The pace of Lightning innovation since its debut earlier this year has been staggering. I laugh when I hear skeptics say that the Lightning Network capacity and growth has stalled because of arbitrary public channel metrics. Lightning Network is not a public ledger like Bitcoin. It's quite like the private ledger, making so-called chain analysis irrelevant with Lightning. Any attempt to analyze the growth of Lightning Network from the outside are futile. Additionally, the narrative I hear in the financial media about Bitcoin as merely digital gold is frankly a little tired. Those people haven't either haven't technically understood the Lightning Network or aren't aware of its existence. Bitcoin now works at light speed, something that a precious and very heavy metal could never do. And then he finishes with stuff at OpenNode, and I don't want to read that part, but yeah, this is what's exciting about Lightning, and it's a good way to talk about why the Lightning Network is so exciting and capturing people's imaginations. All right, and then finally, let's read this one real quick. This is breaking Mimblewimble's privacy model. TLDR, Mimblewimble privacy is fundamentally flawed. Using only $60 a week of AWS spend, I was able to uncover the exact addresses of senders and recipients for 96% of Grin transactions in real time. The main argument against that is basically the article I showed before with Mimblewimble, basically from Grin, saying that these limitations were no, it's not supposed to be a super private coin, and there are ways in which Dandelion's supposed to help with that. But I mean, again, like as the network gets bigger and so on, this is the sort of thing that is going to be harder to break and so on. But the main thing here, in the last 2 years, Mimblewimble has grown in popularity as an up-and-coming lightweight privacy protocol. Several researchers have hypothesized the possible privacy weakness in Mimblewimble. It's important to understand what this attack means and what it doesn't mean. This attack does not let us determine the amounts, and the amounts are hidden by something called Peterson commitments, and they're very, very difficult to unlock. Basically, you have to basically break discrete lock to do that. Say an authoritarian government knows that a certain address belongs to a political dissent. Yeah, if you know who sent it to you, then maybe that can be useful. There are different anonymity sets based on which privacy coin you're using, and the analogies here are pretty good. But the attack is really just basically observing on the network, and this is something that we've kind of known for a while. But using cut-throughs, it basically makes coin joins happen in real time. But if you can observe which input and output is coming into a coin join, then you could kind of figure out, okay, that's who's being paid and so on. So that's basically the idea of the whole thing. I was going to read it, but I didn't. The last one was a little painful. So essentially, the article is correct in the sense that you can't expect the kind of level of privacy as, say, something like a Zcash shielded transaction, or even Monero's like decoy transaction, like decoy anonymity set, and so on, using ring signatures. But it does allow some level of that, and it's not there forever. You need to sort of collect data real time in order to be able to do this, which is to say that just motivates people to collect them and sell them later, I guess. So in a sense, there's a rightness about that, but the amounts being spent is still shielded, so you can't know about that. And there is sort of more privacy than would be otherwise, like in a Bitcoin UTXO system. So that was the big controversy this week. Hopefully, I gave it some justice. All right, let's see if there are any questions here. How do we make BTC more usable for those that need it most? That's a great problem to solve. If you can do it, you can make some money. I think pretty much every exchange has been um, trying to tackle that problem. But people have to demand it. There are people in Iran that are buying Bitcoin, so it's possible over there. How hard it is, I don't know, but it is getting to a lot of the people that need it the most. What do you think about backed and futures market killing Bitcoin? I don't think they are. I mean, that might cause some shenanigans short term, but like supply demand, that those are kind of fixed. Any thoughts on Hex? It's a scam. How do you think a hyper Bitcoin world would affect interest rates? Well, interest rates right now reflect central banking money printing, right? Like when they lower when the U.S. Fed, for example, the Federal Reserve, when they lower the interest rate on lending, that's essentially a way to push out more money into the system. It's printing more money essentially. So that's the interest rate that everyone else uses because that's new money coming in. So the interest rate that you're seeing in the mortgage market, for example, is some derivative of that with some premiums for all the middlemen in between. And those are, small amounts on top, and it ends up being whatever the interest rate is now. I think in the U.S. it's like 3.5 to 4%, somewhere on there. But that's the rate that you're seeing, and that's based off of new money being printed. None of the money in between the M0 and one and two, none of that is really existed before the loan that came out to you. That's all newly printed money. When you have hyper Bitcoinization, all of the loans have to be backed by something. You can't loan out money that doesn't exist in a Bitcoin system. It's sound money. So it has to exist before. So that means that you have to compensate for the opportunity costs. And those interest rates, at least we're seeing in the market, tend to be like 7, 8, 9, 10%. And I think that's probably the right percentage for like the time preference value of money or something like that. Let's see, any other stuff. How is Hex a scam? It's a scam. It's somebody printing their own money. I don't know what else to say about that. All right, so that's about it for this week. Let me shill again a few things. Little Bitcoin book is available on Audible if you don't want to read it, or if you learn a little differently and like to listen instead. Programming Bitcoin is available on Amazon for $40.99 for developers. The Little Bitcoin book, Why Bitcoin Matters for Your Freedom, Finances, and Future, is also available on Amazon. The next 3 conferences I am going to be at are in this one. Whoops. Not FinTech, TechFin.Asia. TechFin.Asia is happening next week in Korea, and it's going to be pretty fun. It's my book is launching as well. There will be a tweet about that. If you're in Seoul, then I invite you to come and hang out. The conference after that is La BitConf, and this is in Uruguay, Montevideo, and it's December 12th and 13th. That's 2 weeks from now. And basically it's going to be a bunch of us, hanging out in South America. Keep hearing how fun this conference is. I can't wait. Looking forward to the meet. If you are in South America, please check this out or try to make it. I will have some Spanish versions of the Little Bitcoin book available. La BitConf. After that is Advancing Bitcoin, and this is going to be in London, February 6th and 7th. And yeah, it was really cool last year. We had a lot of interesting talks and things like that. Peter McCormick, Stefan, Andrew, a lot of people that are going to be there. I see at least a couple of my former students there. Carl Johan is going to be there as well. So a lot of people. It's going to be a great conference. It's more for developers that are still learning the protocol and so on. And then finally, unconfiscatable.com. This is Tone's conference in Vegas. That's also in February. And that's going to be the 20th. 2021 is my workshop, and you can I think register for it. The other one is the Carnivory Dinner and the Celebrity Poker Tournament, and it's really a one-day conference. The 22nd is the actual conference. So all of that is going to be happening. It's going to be a lot of fun. We had a lot of fun last year. A lot of poker players that came and hung out with us and did stuff like that. All right. So anyway, that is about it. We'll see what the views on this video are like, and if you guys like me reading various articles and talking about them a little bit, maybe I can do like one article a week. I think three was a little too much, so I'll concentrate on one article to think about and so on. So that's about it. Hope that helps you. This song is done.